How to stock trade for beginners. Stock trading might be glamorous, but it takes time, effort, and study. Finding a style that grows a portfolio over time isn't easy, but beginners can boost their chances. If you're considering entering the stock market, you must first determine your trading style: short-term trader or investor. Investors strive to profit from the long-term growth of the company whose stock they buy, while traders profit from short-term price volatility. Today's video is aimed at the beginners in the stock market and will show them the basics of trading. Listen up till the very end. First, we will learn what stocks are and why people make the stock trade. Let's begin. Trading stocks increases wealth. The more volatile the stock market, the better for investors. Stocks are more volatile than bonds, thus they're a popular investment. Skilled investors can benefit whether stocks rise or fall. Stock trading is popular because options are more volatile than stocks. Stocks are kinder. Unlike options, equities frequently retain a considerable amount of their value. Therefore, stocks have found the optimal level of volatility, where traders can make money but the risk is kept to a minimum. Your trading goals and approach should have been carefully considered before opening your trading account. Before you jump in, consider these points. Number 1. Which type of trader do you want to be? Are you a trader hoping to increase your fortune through efficient management? Maybe you're an investor who's counting on the value of equities to rise over time. You could do both, investing the bulk of your money in stocks and using the rest for trading. Your stock selections, normal holding length, broker feature requirements, and tax consequences will all be affected by the strategy you adopt. Keep in mind that most traders end up losing money, so you should know what you're doing. Conversely, investors who buy and hold a diverse basket of stocks may benefit from the stock market's long-term appreciation with only a small amount of effort each year. Number 2. What strategies are you going to use? So you've decided to enter the stock market. What methods do you plan to employ? So will you try to make a few cents on each trade as a scalper? Do you plan on solely buying stocks, or will you also short sell? When do you decide to stop losing money and start making money? Do you plan to engage in swing trading, where you ride a stock's trend to profit? Or are you a day trader who enters and leaves a position within days? These are some questions you may ask before investing. You should experiment until you find your method. You'll have fewer and less diverse questions to consider while investing. When will you need the cash? The third and final question is, how much risk are you willing to take? Or is it your preference to invest in stocks which carry a higher degree of risk, or funds which tend to carry a lower degree of risk? What is your initial investment goal, and how much can you put in each year? Investors may be asked a few additional questions, but the overall list is significantly shorter than what traders would be asked. If you're enjoying this video, please hit the like button and subscribe to our channel if you haven't subscribed yet to show your support. Now let's continue. Number 3. You need a brokerage account. Your trading strategy should guide your decision of a broker. Those who are opening their first brokerage account should look for a firm with a solid reputation for excellent customer service. Excellent customer service will answer all your queries and fix any problems you encounter. You can get acquainted with a broker's features and tools with the help of articles and videos available on the broker's website. Ensure your banking information is on hand when applying for a new account. The broker will inquire about your expected income level, the extent of your financial holdings, and other details. Most accounts may be opened within an hour, and you might not even need to put money in it immediately, though that is always a good idea. Number 4. Find some trade ideas. You can't make a deal if you don't know what to exchange. A reliable brokerage, a stock newsletter subscription, or the internet in general can all be helpful resources. Whether you're a trader or an investor, knowing when to sell a position is crucial. Traders frequently liquidate their holdings when a stock reaches a predetermined price, either a gain or a loss. Investors may feel the same way, though they may also hold on to a stock for decades if they believe it will continue to rise. Number 5. Perform the trading. After deciding what to trade, execute the trade. Know your fundamental order types, though most brokers provide more. First, a market order executes at the best price when you place it. You'll pay the lowest price if you place a market order to acquire stock. Market orders sell stocks at the highest bid. Second, limit order. With a limit order, you tell the broker the trade price. The trade will be performed if the broker can achieve that price or greater. When placing a market order, you're accountable to the market. You'll pay the market rate. Large liquid stocks won't cost you anything, while smaller, less liquid stocks may. Once you possess the stock, you can be vigilant about when to sell or less, so if you plan to hold it for years. When a stock drops, it may offer an attractive price to acquire. So that's all for today's video. Tell us in the comments section how today's video was. I hope that you found this one interesting. If you want to see more videos like this, then please consider subscribing for more. And don't forget to give comments and provide us with your valuable feedback. We'll see you in the next video with some more interesting facts and stories. And until then, stay tuned.